9/11 resulted in $32 billion in insurance claims. I hear the second most costly insurance event in U.S. history. Insurers had to respond by substantially raising insurance premiums for terrorism coverage or suspending it altogether. By early 2002, 45 states had excluded terrorism from their commercial coverage. What's more, in the 14 months after 9/11, one estimate from the Real Estate Roundtable found that $15.5 billion of real estate projects in 17 states were stalled or canceled, as Mike was talking about, because of a continuing scarcity of terrorism insurance. Moody's Investor Services downgraded $4.5 billion in commercial mortgage-backed securities for the same reason. Congress's solution was the Terrorism Risk Insurance Act of 2002, or TRIA, as we all know it so well, which has the government share in terrorism-related insurance losses only if the attack is of significant proportion. This program was slated to end in 2005, but has now been extended twice, with the expiration coming up most recently on December 31st, 2014. So why do I support this program? I'm a conservative Republican and believe in free market, free enterprise, fiscal responsibility, and limited government. I know that the last thing our taxpayers want is another bailout for any bank or any company. However, I see no conflict between my conservative principles and the concept of government backstop for terrorism insurance. The terrorism insurance market is unique. You all know that, but we have to get this message out. It bears little resemblance to any other insurance markets. Terrorism insurance is unique really for three reasons. First, government intervention seems to be necessary, at least for the time being, to ensure a highly functional terrorism insurance market. One poll by the Risk Insurance Management Society of Risk Professionals found that if TRIA expired, 45% of respondents would expect a decrease in terrorism coverage limits, while 24% believe that coverage would no longer be offered by insurers. It's difficult to provide privately backed terrorism insurance because of how hard it is to develop risk models for the likelihood of a terrorism attack. Insurance companies typically want to predict a loss's location, severity, and frequency, while it's almost impossible to do that with terrorism. Unlike regular catastrophic events such as flooding or earthquakes, you can't predict the average loss from a terrorism attack because, by definition, it's random and unpredictable. Unfortunately, this does not make terrorism insurance any less valuable for our nation's job creators who need to protect themselves from a potentially bankrupting loss.